Welcome to MarketSizing.AI. MarketSizing.AI is a platform to quickly get you to a TAM, SAM, SOM values based on real research with the help of AI. Let's get started. So the first thing you're going to want to do is sign up for an account. So I already have one, so I'm just going to go ahead and sign in. Next, we're going to create a new project. So I'm going to say market sizing extraction startup. And I'll leave the description blank. So I have a PDF, a slide deck that I already have used for another project or for this project. So I'm just going to go ahead and upload that. So now what this is going to do is it's going to read through the PDF file, extract all of the text, and identify which customer segments or addressable markets for customers are appropriate and which business models make the most sense to monetize this business. So it's automatically going to extract those two things. And then for each one, after that's done, it's going to extract the metrics that would be required in order to come up with accurate calculations. It's going to come up with some best case selections and do that. I'm going to pause the video while this is running because it's going to take a few minutes because it's doing quite a bit of analysis. All right, so that took about 3 to 5 minutes to come back. So what this has done is it's basically said, what are the addressable markets? So the total addressable market would be all of these addressable markets listed: tech startups, accelerators, or advisory agencies. But we just want to pick one. So our serviceable addressable market is going to be tech startups. It automatically selected this just based on the deck, but you can pick whichever one you'd like. Or multiple if you really want to. So within this, it also extracted how we calculate that number. So if we go into the actual metrics that we need to know, the customer groups are number of United States bootstrap technology startups, accelerators affiliated with technology startups, venture capital backed seed stage technology startups, and venture backed first round after seed technology startups. So what this has done is it's automatically added some synthetic data here. So this is not research, this is just placeholder data, so that we can go into the report and see what this would look like. Before we do that though, let's look at the other half of this, which is the monetization, the business models. So the business model that we're going to apply could be a SaaS subscription, could be on-demand customer report generation, could be agency partnerships. You can only pick one of these. So let's say a SaaS subscription. And the metrics within this one are how you come up with the average revenue per user for the given business model. So subscription revenue per user, overage revenue, add-on revenue, paying user share, average monthly affiliate revenue, so all of these things. And again, with some placeholder data. We're going to come back to the research later. But using these synthetic numbers, it could be ARPU monthly of 9163. So now let's go to the report. It's basically going to run simulations assuming all of those numeric values. The top number here is the TAM, the middle number is the SAM, and the bottom number is the SOM, the serviceable obtainable market. And then if we scroll down, you can see the charts for all of these. So basically everything's simulated out using a Monte Carlo simulation. Here's the SAM, and here's the SOM. This is the one that's actually the most interesting to us. So this is saying that this opportunity, assuming average 45% adoption with these synthetic numbers, again, $24 million opportunity. And so you could say that, the majority of it, the revenue is coming from tech startups. This is what the run rate looks like over time. The problem is all of this is synthetic data, like it says here, the synthetic placeholders. So what we want to do is we want to go in and actually provide real research data in order to get our true TAM, SAM, SOM. And the way that we do this is we go into the metrics and we actually conduct the research. So if you already have information on like how many bootstrap technology startups with fewer than 50 employees there are, you can just add this in here. However, if you want to use AI to conduct the research for you, we can just do conduct research and it's going to actually run deep research. So I'm going to kick off all of these. And this is going to take a few minutes to come back because this isn't just doing a simple LLM lookup. This is actually running the AI deep research. We're also going to do it on the business model as well. And this is all done in the background, so this should work fine. And now I'm going to run the research on these. Again, running deep research, and run deep research. And now we're just going to have to wait for these values to come back. All right, well, these other ones are still researching. We have one of them that has come back now. So we did conduct research, and the research findings are shown here. So basically, this is the result from all of the deep research that's trying to come up with a quantified value of the average monthly subscription revenue per paying user, given the monetization and given the business description that was provided. And so all of this is actually has the citations broken down here, so you can read through it, see if you agree with these values. And then it extracts from this an actual estimate of what are some reasonable numbers for this metric, for the average monthly subscription revenue for this application. All right, now all three of them are done. So it's coming up with what is the range for each metric, $10 to $75, average monthly add-ons, maybe $8 to $10. In the estimation, it says which part of this whole entire research report, which part of it actually is referencing when it comes up with these numerical estimates here, this $8 to $10. Let's go check in on the customer sizing, the customer segment analysis. So likewise, on the customer group metrics, how many US bootstrap technology startups, it's thinking 40 to 60,000. Here's the research, here's the citations. Number of accelerated affiliate technology startups, 1,600 to 2,550. All right, so now all of our synthetic data has been replaced by actual research to data. So when we go to our report, this is the actual value for the serviceable addressable market and the serviceable obtainable market. Now note that the TAM hasn't actually, it still contains synthetic data because we only did the deep research on one of the segments, the selected segment that we're most interested in. And so we can go back and do that, but the more important thing is how big is the actual SAM and SOM numbers for this business, and are these what we're expecting to see? So serviceable addressable market looks like quite a spread here, mean of about $3 million. Obtainable market, again, Monte Carlo simulated, roughly 45% adoption to get 1.4 million per year. The TAM, so tech startups is the most important thing. Annual revenue run rate, so how much money are we going to make over time? And this is using some of the go-to-market metrics. What's the gross profit annual run rate? So this is considering the COGS and the customer acquisition costs. So what's the actual profit? And then it's going to break it down by what are the revenue contributions for each of these values. What's the customer lifetime value? So it looks like LTV $184. Business model overview. So this is breaking down what's the most important monetization. So in this case, it's the subscription revenue. Market metrics and research. So this is actually looking at the Monte Carlo simulation of each of the individual numbers to make sure that this actually fits your expectations. So subscription revenue on average being $41 a month. Does this make sense for this business model? Likewise, number of customers. So most of the customers are coming from tech startups, so it's most important to get this number right. And then you can also look at some of the go-to-market metrics, like what is the adoption ceiling? Like maybe if I don't think that 45% makes sense, I can go into the go-to-market adoption curve and say that, okay, the adoption ceiling maybe 35 to 55 might be a bit high, and I should actually do some research on that as well.